So this brief video is designed to kind of show you how to use the GoSeek function in your Excel to solve problem 12 from chapter 8 homework. So the chapter 8 homework is asking you to do a break-even analysis. By design, the break-even analysis essentially is asking you to figure out the percentage, the percentage change or the number of sales, whatever, that allows you to get a zero NPV. Okay, so again, the target is to make sure your net present value is zero, and then you wanted to see how changing a particular variable is allowing you to achieve that goal. So in this case, the part A is asking you to get the break-even annual sale price, which means you're changing the sale price to achieve a zero net present value. For starter, you want to make sure all the information is put into the Excel spreadsheet. The only way to make sure the GoSeek works is making sure everything is all linked through formula. So you can't really just type in with number. If you just type in with number, it doesn't work. All right, so there are two ways to get the information onto a spreadsheet. Unfortunately, in this case, it didn't really allow you to copy the numbers. So you can either, use the data from whatever they have over here, or you can use the data from the previous question. Okay, but it's actually easier for you to just start from scratch rather than just copy the number because you can't really use them anyway. So first thing first, I have 50,000 units in year one, so that's a number of units sold. And then they're increased by 51,000, okay? So the first column over here under the year is where I put the changes. Okay, so I'm saying it's gonna be 51,000 changes. Notice here when I put this number, everything changed because all my cells are linked, okay? So except the first year. So first year I put in manually. Okay, so first year is 50,000 units. And then second year, it's gonna be based on the first year plus the change. Okay, I anchor the change so I can use the same function for year 3 and year 4. Okay, and then for my second, that's gonna be, I believe that's gonna be the sale price. So the initial giving sale price is 260, and then they're gonna change from one year to next. In this case, I don't really know the change yet, so I randomly put a 10%. Okay, and then all my future selling price is linked by this change. Okay, so for instance, for my year 2 selling price is gonna equal to year 1 selling price times 1 plus the change. Okay. I have a negative 10% change. That's the reason you see the selling price is declining. Okay, if I change it to positive, you're gonna see it's all increasing. Okay, so you can do whatever you want actually. And then right now, this is a number that you don't know. It's not providing the question. This is what you're looking for. Okay, so I'm just gonna highlight it. So this is the one you're trying to look for. So let me just highlight it. All right, and then I have the costs of each unit. So the initial cost is 120. Again, there's a connection, so it's going to be gradually decreased by 18% annually. So this is a percentage decrease. And then my second year is a minus 18% change. My third year is another minus 18% change, and so on and so forth. Okay. So the next thing is I have a capital expenditure of 15 million, which happens at time 0, so it's negative. And then I have an annual selling general administrative expenses, which is 2.8 million. Okay, so it's an annual amount. So I put it over here. And then I have a 100% depreciation. It's called 100% bonus depreciation. That's 7.5 million. Happens at time 0 right away. And I have 20% tax rate. Okay, so these information, what I did was I basically just input it manually. I'm gonna skip the net working capital for now because net working capital depends on my sales and cost of goods sold, which I don't have yet. So now I'm moving on to my income statement. For my income statement, it should be pretty straightforward. My sales is going to equal to my selling price times the number of units, right? I sold, so I have selling price times number of units. I'm going to do this for the same, 4 years. Cost of goods sold is going to be selling cost of goods sold per unit times the selling units. Okay, and then my gross profit is essentially sales minus cost of goods sold. Right? So I have sales minus cost of goods sold. And then I copy the selling general administrative expenses down with a sign. And then I also copy the one-time capital expenditure and then the one-time depreciation. Okay, so for my EBIT for time 0, it's really just a sum of the two expenses. So I have the capital expenditure, I have the depreciation. Okay, for my year 1, what I'm gonna have is going to be my sales minus cost of goods sold, plus the selling administrative expenses. The reason I'm gonna plus it is really because I already have the sign over here. Okay, so if I don't, I'll be doing a minus. You know what? Let me just be more consistent so it's a bit easier for you. So it's going to equals to 2,800. Okay, and then I can change the formula to make more sense. So it's gonna be sales minus cost of goods sold minus selling general administrative expenses. Same across all 4 years. All right. So I don't really have any depreciation. Normally, if I have depreciation, I would also subtract depreciation. Okay, so in this case, I don't. So now I have sales and I have cost of goods sold. I can go back to figure out my accounts receivable and accounts payable. My accounts receivable is 15% of the sales. That's the reason I use 15% times the sales. And accounts payable is 15% of my cost of goods sold. Now working capital is current assets minus current liability, which is accounts receivable minus accounts payable. Okay, so same thing for all 4 years. Okay, and my year 5 is going to be 0. My year 0 is going to be 0 as well. All right, so now finally I can use all the information I have to figure out my free cash flow. So for my free cash flow, it's basically net income, right? Net income plus depreciation minus the capital expenditure, which in this case it's already in negative, so I can just add it, and minus the increase in net working capital. Okay, so I do the same, okay, for other things. So it's always going to be net income, depreciation, capital expenditure, and net working capital. Okay, so on and so forth. And before I can get the net present value, I need to figure out the present value of everything, because the net present value is a netting of the present value of benefits and cost. So to get the present value, I discount, right? So I use the free cash flow divided by 1 plus the discount rate to the power, which corresponding to the year that cash occurs. So you have 0, 1, 2, 3, 4, and 5. Okay. So again, by the way, for your final year, year 5, notice here you have no net income, no depreciation, nothing. The only thing you have is the increase in net working capital. So that's the reason when you subtract the increase in net working capital, which in this case, is actually decreasing net working capital, it becomes a positive cash flow. Okay, so anytime you have increase in net working capital, that translating to a decrease in cash flow. If you have the reverse, a decrease in net working capital, that would translate to increase in cash flow. Okay, so that's something to keep in mind. All right, so when I discount, again, so for the final year, I discounted to the 5th power. So my net working my net present value is a summation of all the present value, right? I'm just adding everything together. So now, as you can see, all my cells are linked. So what I'm going to do now is I'm going to go use the GoSeek. So you can find the GoSeek when you click the data. Okay, it's under the forecast, the what if analysis, the second one from the drop down. So the goal seek allows you to set a target value, and then in order to reach a target value, you can change one of the variable. Okay, so in this case, it works perfect for our situation because I have my target value, which is net present value, that need to equal to 0. And then my changing variable is going to be the highlighted the sales, the selling price. And then I'm just gonna let the spreadsheet to work its magic, okay? So it's gonna equal to negative 21%, okay? Again, you can always click on the link to see the decimal because the question really asks you to get the decimal points. B is asking you to figure out the break-even annual unit sale, right? So what happened is I'm gonna keep the same spreadsheet. I'm just gonna change the information. So my sales is still 50 units in year 1. And then all I need to make sure to change is my unit sale, which in this case, let me just highlight it. So I'm gonna highlight it in green. So this is part B. I'm gonna change this one. And my selling price is 260 starting point, decreased by 11% annually. So I'm gonna change it to 11%. And the cost is 120, decreased by 18%. So everything is the same. And all you need to do is just use the goal seek again. So what if goal seek, you want to change that to 0 by changing cell, the number of units. Okay. All right, so as you can see, it's gonna return you a value that basically gives you basically give you the unit cell increase. So it's gonna be 23.46 thousand, right? Unit increase. Okay, so yeah, so that's how you solve this problem.